Hello guys and welcome to another market review. As always, we're going to kick off by looking at the euro. It's my main instrument to trade. It's the most reliable one, where I have the most expectancy. Um, so yeah, if you remember last week's analysis, we had a bearish bias on the euro. Well, this is still in a range. We are playing this level to level. We are not seeing any trend forming. So why was our bias bearish? Well, first of all, I'm gonna get rid of this range levels so that this becomes cleaner. The main argument for having a bearish bias was that, especially when we are in this range environment, you get a lot of chop. And when a fast move happens, such as this one here, or maybe this sell-off here, you know that price is very likely to revisit those areas because we are not trading in a trending environment. We are trading in a range-bound environment. So in a trend, it doesn't matter if you have a huge imbalance, huge spike, because any pullback into this area is gonna get bought very likely, and prices keeps moving higher. And all these imbalances, inefficiencies, however you wanna call them, they are great buying opportunities. But when we are in a range, it it works like in a not an opposite way, but you just know that the likelihood of price coming into those areas is really high. So if we rewind, I think last week, yeah, we were trading here. So at this point, there are no inefficiencies to the upside. And it doesn't take a genius to realize that the biggest and untapped inefficiency is to the downside. So that was one of the points why we were bearish. The other one was that if I drag back the range levels and I zoom out, we had just rejected from range highs. So a rotation lower is expected after that. Same way you would expect a rotation higher if you took out the lows. So those are the 2 points that gave me that bearish bias. So just for more visual clarity, um, gonna get rid of some of these drawings. Yeah, there you go. So we were covering the market around here, and price opened with a gap down. So when that happens, you have to be very, very careful, because if the gap gets filled and price pushes up, then that means um, that it's very much more likely to push higher, right? Um, but whenever you get a gap and price rejects from the gap, closes below the monthly open or the weekly open, and you are much more likely to move lower. So this was a bit tricky, and of course, the moment the market opens, you have to um, watch how price behaves around this gap. So we got a push above the yearly open, but the market really did nothing with it. So once price trades here, something comes up to my mind. I'm like, okay, we could draw this trend line here. Isn't it beautiful? Um, just basically linking these lows, this low here, and then you have this big rejection at the trend line. So market sells off from that trend line, trades into the yield, into the weekly open, and you know, if we were mainly bearish, so what I wanted to see was a break below the weekly open. So okay, how does the break below the weekly open look like? Well, first of all, you can remove a lot of noise if you move up to the H4 time frame. So what looks like a market breaking down on the H1 looks like a simple test of support on the H4, and you can see how it really pays to wait for the market to close below a level on the H4 instead of taking the H1 signals if you take them, because a lot of times you're just gonna get trapped, and in my opinion you're much better off just waiting for the H4 signal and then selling a retest than just taking the H1 close, because you know you're gonna get a lot more losses, and I don't like taking losses, even though they're part of the game. If I can avoid them, I will. So here we got a H4 close. So what I did was coming in short here with a limit at the weekly open, and from there, once we got the move lower, I said, well, okay, you really shouldn't retest the weekly open. This one here just came a bit short. It would have taken me out of break even because I moved my stops at break even once price moved lower. But here it really failed to break lower, and we reclaimed the weekly open. And even though I didn't really trust this move, I knew it was gonna go higher, but I just didn't want to engage on the long side here. I mean, I I should have, right? Because you could have done something like this, okay? Because this point you've trapped a lot of shorts, very likely below the weekly open. You have this candle here, which fails to close above, and the next one does close above, and then you get another thrust above. So this whole price action below the weekly open looks like a trap, and if we push higher, all these people are gonna puke. That's the way I view it. So if you had bought that into the yearly open, you can make good enough money, and you could have also traded it into the trend line. So that was what happened last week, and you know we got a bit of consolidation below the yearly open, and market pushed above and traded into the trend line, and what a surprise, you get a perfect sell-off from there. So if we go to the weekly time frame, even though we got all that move, the market closed just nearly at the same price that the previous weekly closing price. So I was like, well, okay, we didn't break lower, but at the same time, we had two consecutive weekly failure above the yearly open, especially. And here, I think there are some conflicting signals because you do have a bullish engulfing on Thursday, but the Friday candle looks really bearish, really bearish, traced into the trend line. Uh, it really doesn't line up with a true bullish engulfing. I mean, if the market is bullish after you get if you after you trap shorts below the weekly open and you print a bullish engulfing, the momentum should carry on, and we should have traded. Oh, we should have closed above the daily bullish engulfing candle, but we didn't. Instead, we print this candle. So at that point, I'm looking at next week, the current week, and I'm thinking this is more bearish than bullish, even though we are still trapped here and price has closed at the same price that uh, it closed last week. But this is more bearish than bullish because we didn't do anything with this. There was no momentum brought from this candle. So what are my plans? Well, today we've opened with a gap to the upside and we've sold off. We've filled this gap completely, even though we had some reaction here. It was immediately sold off and we are, trading into last week's lows. So yeah, if you look at the H4, you're gonna see a lot of rejection just above the monthly open and below the yearly open. And also, something that comes into my mind as a selling opportunity is Friday's low, because it was a very bearish looking candle. So I want to see how price reacts from that level. And well, from what we've seen today, the market found a little bit of support there, but then it immediately broke lower as we left a H1 flat open candle and we traded into last week's weekly open. We bounced and we are now rejecting from that same level, that Friday low. So that market does look important to the market. And if you know, one could have done something like this and go short, right? But the trade I'm chasing on the euro is towards here at least, because I believe we need to feel this inefficiency, all of this at least, but quite possibly towards April monthly open. Yeah, so I would say target 1 and target 2 for this trade. I mean, you could also take profit at these lows, but I just don't think if you caught this move, if you're positioned for lower, it doesn't make any sense to take profit here. I wouldn't, because it's very much more likely to trade into this inefficiency. So yeah, if you look at the daily time frame, this looks like a very good spot to engage shorts, in my opinion. Problem is, on the hourly time frame, it's already been tested and it isn't naked. So the reaction is not going to be as clean. So it looks like it's done. It's done. It's not going to go much lower today. I think the bottom for the day is very likely in. So I'm really interested in watching price, how price behaves at this level, because if it's reclaimed, I would abandon um, the short idea, right? The plan right now for me is to just wait, um, because this would not be the first retest, and I don't see any clear levels to sell from on this current leg. What I would do is just really let price develop, right? So if we see some rejection from here, maybe you can ape in, go short. If I would much rather see something like push and then another strong rejection and then maybe engage short in something like this. What I can think like, okay, that was the attempt above the daily level. I can put my stop there with my entry around here, just below the daily level, and then take this all the way lower. I'm gonna look for an example of a short that I took, which was this one, right? So I want to see the hourly there. Okay, so this is what I mean. Okay, it's a kind of a similar scenario or reasoning process. Here we had an important daily low, and the market closed strongly below it on a daily time frame. And you know, there wasn't any retest. So the market was naked, it was not tested, and the first attempt here was where I came in short with a limit order. We cannot do that right now because on the hourly we've already had that. So I would have much rather not have price test this level. Instead, the market just break lower, maybe consolidate here, do an explosive move, then come in short there, and you expect to move lower. The fact that we've already traded into the level has just made me run out of ideas for stepping in short here. So I think the probability of a short working here is reduced due to this detail. I do think that if price reclaimed the weekly open with a H4 close, I would come in short. Sorry, I would come in long. I can see that happening. Why not? So if we go to H4 close, I would buy a retest of the weekly open. I would like, and I would aim to target this trend line and watch how price behaves there. If you recall last week's analysis, one of the triggers for the long side was um, reclaiming the trend line. So that can also happen. We've had a perfect bearish rejection from the level, but we could also get stuck there and find strength. I just don't see that as the main scenario right now. I've already explained why. I think the bearish scenario um, is much more likely to happen. So yeah, I think I just step aside and let this develop. I do hope we maybe get some price action towards the monthly open or the yearly open and some strong rejection. Maybe you can find a relevant low before the market breaks lower, and you can sell a retest of that level. That would be the only trigger that I would find now, because I'm not gonna come in short here, because where do I put my stop loss here? Here, just in front of a daily level. Here, just above the monthly open, where it could be retested. Why not? Just at the weekly open, I could do that, but then the risk reward is not that great for an entry that I don't think is perfect, right? So yeah, that's my plan on the euro. In short, I just want to see more bearish price action around here. Maybe come in short on a retest. Now let's look at gold, because I did think that gold was a great shorting opportunity at this area here. Since we have a naked level here into this huge selling origin, but the market hasn't found the strength to test that, so the market is pushing lower, and I think the market is trapped between this area here for selling and something like this area for buying. And I think if price comes into the yearly open, it will be a great opportunity for longs, especially if it happens this week, because it would be very extended for a week. So a bounce from there would be very likely to happen. I'm just scanning this market to see if I can find any naked levels above the yearly open, but I don't find any. So, all this area doesn't have to be exactly the yearly open. around here, it would be great, great for longs, in my opinion. Either this week or the next one. I think you can place something like that. As for the short side, I mean, I do think it's quite tempting to come in short here and trade this lower, but that's the thing with gold, it's not my main market, and I'd much rather play around the weekly and monthly opens, but this low really stands out to me. So I don't know, I think it might be worth a punt. Small risk. I think it could do, because I'm quite convinced that we're gonna revisit all these lows. At the same time, the most clean level that I can spot here is the April monthly open. If we found the strength to trade into that level, you can see how it was a massive support there. And if we got that as something like that on the RSI, you would have a bearish divergence into that level. That would be a fucking great opportunity to get short this market. But again, I think it's a bit in the middle of nowhere, and I much rather play longs from the yearly open or shorts from the 5k level. Last but not least, I wanted to cover Bitcoin, because sorry for that, because we are seeing the market grinding higher but into resistance, and we've had some reaction from this area here, sell off, sell off, sell off. But you know, if you look at this on the hourly time frame, or maybe even the H4, this whole move up has been, I don't know how to say this, but it really doesn't look like it's topping for me, unless we ranged here and we got rejections from the highs. Maybe then you could look at this and identify this as distribution, momentum shifting, and probabilities for price to move lower increasing. But you know, if you compare it with other price action, all this move looks more like a slow grind higher than this here. You have a big spike to the upside, sell off, and then another an even stronger move and more inefficient. Look at this inefficiency left back here into resistance. We really don't have that right now. All this price action has barely left inefficiencies, and prices is stalling here. So I don't know. I don't think this is a top. I think 85 more likely to trade into this area for a top than this. And it also lines up with some analysis I did comparing this move to how much Bitcoin retraces on a downtrend. So here we have a 45% move to the upside, and if we do something similar, you're gonna find that the 40 to 44% lies just around the yearly open, not the current area. So yeah, those are my thoughts. I think that I'm leaning more bullish than bearish, even though we are trading into resistance. We have this daily imbalance, and I think that price trading into this area could be a great buying opportunity towards higher prices. And I think, because this move here, because if you look at the left hand side, you're gonna find this is an inefficient move. I think that if price moves towards the yearly open, it's not gonna be a slow grind up like we've seen from April until now. It's more likely to be something explosive, inefficient. And I think that's where the trap lies for the bulls, because they will see a fast move happening into resistance. Price will stall here and they will get trapped, and then this will retrace. So really these are my thoughts on Bitcoin. I'm not looking to engage short or swing short until we trade into this area here, just around the yearly open. Doesn't have to tag the yearly open, but strong selling happen just around that level. Or I want to buy a pullback into this daily imbalance, which will be healthy for a push higher. But I don't want to buy nor sell at the current price the market is offering. So that was everything I wanted to cover. Hope you found it useful, just like I do. And see you guys next week.